Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. So we begin. I mentioned yesterday that the S&P 500 has been taken over by retail investors being stupid, and slightly smarter money is undecided. However, this little flag pattern that I thought I saw on the VIX looks like it's breaking through to the downside, giving a little bit more confidence to the markets very short term. Another very notable chart today, the XHB Home Builders Index. We hit new all-time highs. People think that it is a good time to invest in housing still, apparently. Notably, we have this trend line on the 10-year note yield. I had noted this trend line, and I had expected this trend line to act as support, as I thought it would be going higher and higher, and we broke that support today. And so my crystal ball and I did not see this coming. We were seeing and hoping yields could actually go higher for an opportune time to get more bonds, essentially, more bond exposure. And so now I'm looking at a slightly lesser possibility of that happening. Looking more at the 30-year bond yield, that dropped even steeper today, more clearly breaking this trend line here that had been developing. And so I really don't know what to make of this, where things are going. It doesn't seem to be breaking down or going up. We're kind of caught in la la land here. But if you look at it from a perspective of this being the low, this being a high here, and then this a higher low and a higher high, this kind of a pattern is still a bullish pattern, but at a slower rate than what it had started looking like before, from the patterns that we've been seeing, like this little flag pattern here broke out higher, but now we broke down from it. And so looks like it might take a little longer to get to that target if we end up getting there. Notably, one of the major semiconductor companies out there, if you look at the last month, the craziness in this market, one day it's down 30%, one day it's up 30%, today it's down 12%. Yeah, this is getting choppy, and as I had said before, I think this is dumb money piling in. They're in other words, buying it, and smart money selling it. That's what I see going on there. We have similar looking action going on in some other stocks. Booking Holdings, previous Michael Burry, a favorite stock, collapsing 10% notably today after going up so much yesterday. A lot of people saw this pop and were thinking similarly to me, oh man, I missed this out, and then it goes down 10%, but a PE ratio of around 30 is it's nothing to get excited for, as far as getting something that's potentially undervalued. There's plenty of speculative value in this company. Even if a company has great looking earnings growth, you don't know when that's going to stop or potentially reverse. The only way to give yourself any kind of assurance of earnings of a company is to look at an average over, the past 10 years. And that's the number you want to depend on for valuing stocks, generally speaking. Otherwise, you're adding a strong speculative element to the value of the shares. One of my favorite extra dumb money markets, the cannabis markets, MSOS popped notably higher today, 5%. This is looking like, again, dumb money going into all the wrong things all at the wrong time. And it still looks to me in my crystal ball like all of this will end pretty badly. Last notable chart I wanted to mention today is Bitcoin. You know, let's zoom in a little bit. We had been here, this is a daily chart. We had been in this 52,000 range for a while. This looks like it might be breaking down a little bit here, but my crystal ball is not, you know, very confident about where this is going from here. I think the way that I see it right now, when I look into my crystal ball, it's a matter of dumb money, retail investors, how much powder do they have and how much are they willing to spend on making markets go higher until the music stops and everybody looks to see if they can grab a chair. And when that happens, I think we are looking at an escalator going up, elevator going down kind of a situation like what usually happens in markets. You know, you go up slowly, and eventually, when there are breaks in the market, they tend to be pretty violent. And so it's coming. That's all I have for you today. Thank you for watching. Robschild.